guys, welcome to my channel. I hope you are doing well. My name is Patricia and you are here over on the break where we are giving you the tools to learn, grow and navigate life like a boss and make money moves in the process. So today I wanted to get into it. I wanted to talk about investing, particularly for beginners because I myself am a beginner. I am on the journey of investing more. I've talked about investing in property, which is where my remit normally is, but I'm also investing within stocks and shares. And I wanted to share with you guys all about that, everything that I've learned as I am on my financial growth journey. And I know that investing seems like something that is unattainable or it just seems a little bit confusing, but I genuinely believe it is for everybody in this day and age. Everybody can have access and there's so many tools and resources to help you learn how to do it and how to do it better. So in this video, I thought I would just go over like the basics, the benefits, and then talk about the hows and what's involved, as well as give you a little bit of a jargon buster. So again, this is a bit more introductory level for someone who doesn't really completely understand what's going on. You know people are making money, but you want to know how you could do it as well. So if you've got £10 or £10,000, there is an opportunity for absolutely everyone to invest and make a return. And I really think investing is great because it's like the only real form of passive income. You don't have to do anything to make money from investing in the stock market besides put your money in smartly. Now I know that we've all heard from our friends or from someone, you know, hit the like button if you've definitely encountered someone who's told you about how much money they've made on like Bitcoin or on the stock market or on trading, and you're like, man, I need to get into this. How many videos have you watched that have told you about like instantly making money? That is not going to be one of these videos today. Like, I'm just going to give you a genuine lowdown. I thought I'd talk about the value of investing, particularly within the stock market. And as I've mentioned before, investing is the idea of putting money into something with the expectation of a return, but there are no guarantees. I would always say invest in yourself first, invest in your ideas first, invest in your education first, invest in you first, and then you want to look at these other options that can also generate you income. And I've talked about having property, having business, and multiple different options. Investing, particularly in the stock market, is just another option that can help you make a return on putting your time or your effort into something. And with the stock market, it's specifically putting money into stocks or investment products or financial products and then making money off the back of it. So one of the ways you can make a return is basically general capital growth. This is because the stock market goes up, you might buy a stock and then that stock goes up in value. So for example, Jeff Bezos, the richest man in the world, he wasn't always rich. Like Amazon stocks, they used to be just over $2. I think it was $2.72 when they first were listed. And this is in 1997. Nowadays, these are worth over $2,000 per share. Can you imagine if in 1997, if I had bought like 1,200 shares, I would be a multi-millionaire today. I would be worth exactly $1,130,000 richer. That is what I would have been worth today if I was an investing baby, because in reality, I was a baby in 1997, but you get the picture. Basically, you can put your money in. If the company grows and the company does well, then guess what? The price of the stock goes up and you make capital gains. Whether a company like grows or doesn't grow as exponentially as Amazon does, in general, the market itself goes upwards. The market in 1900 is not the market it was today. In the same breath, in 20 years from now, the market should also be higher than what it is today. So another thing that's really valuable when it comes to investing is that you can also protect yourself from inflation. And I've mentioned this before, but inflation is when your money today is less valuable tomorrow. So if you could get a loaf of bread today for £1 or $1, tomorrow it costs £1.20. You need more money to get the same product in the future. That is inflation. And we basically deal with inflation all the time. You remember, you've heard your parents or someone say you could get a house for $50 in my day. That's basically inflation, and also rising markets in general. So for instance, if inflation is at a percent of 1% or 2%, that means that that's how much your money is becoming less and less valuable. But if you're able to invest in the stock market and you're able to get a 2%, 4%, 8%. 8% is hard, but if you're getting a return, then you are beating inflation, and so your money is not losing value and it's worth more. And when we talk about putting money into savings, nowadays where there are negative savings, your money is also worth less as well. So investing in the stock market is a way to combat that. And then there's the principle of compound interest. And this is where you have interest that makes you money, and then you make money on the money that's made money, and that money makes more money and more money. So compound interest is a beautiful way of making money work without you having to do anything. It's working itself, it's building the muscles. Don't we love it? Don't we love the idea of making money without having to do anything? Like, that would be my life. That would be great. Now, when it comes to what you get out of investing, it does vary, and it really depends on what your goals are. But either you want to be someone who receives a dividend, which is like a salary or a regular payment. This is when basically a company, when you buy their stock, they give you a dividend. It's almost like, thanks for buying our stock. Here's your reward for buying our stock, because they want to give back to the people who've given them their money, but also they want to like attract new people and keep their current customers happy. And companies give out dividends whether or not they've made a profit. Some companies don't give out dividends. They just say, listen, our stock price is going to be worth a lot more, so just be happy with the stock. And there are other companies who would much rather pay out your dividends. So for example, if you were to buy a Universal stock as of today, which I believe is $45.87, and there's a yield of 7.34%, you would receive just over $600 a year if you were to buy 200 shares at the price of $9,160-ish thousand. That is a decent rate of return. If you put 9,000 in, you're getting 600 out. It's great. That 600 is a really nice return on that investment, much higher than what you'd get in a savings account. But if you were to keep that money in and you never put another penny in, you would end up increasing the value of that $9,000 to $37,000 without putting another penny in. What is the stock market? Let's see it as like a grocery store. You're gonna get some apples, you're gonna get some oranges, you're gonna get some pears. These are basically financial products. And the things that you normally see on the stock market are, of course, stocks, shares, as people call them. You will also see bonds, and you will also see different types of funds, currency, or cryptocurrencies as well, which is another financial product. What is a stock / what is a share? It is basically a piece of a company. You have the opportunity on the stock market to become an owner. So you can own a little piece of Facebook for a nice little price. You can own a little piece of McDonald's for $199 a share without even having to flip a burger. You get the opportunity to be an owner in one of these companies by buying a share from them. And then you have a bond. Bonds are considered more of a safer kind of product that you can get on the stock market. And these are an IOU, usually to corporations, but even governments. Usually corporations and governments, they issue these because they are trying to raise capital to fund some form of project, or they need to inject a lot of money in their business, but they don't want to offer shares, or they can't offer shares. So instead, it's like an IOU, and what you do is you provide an amount, you become a lender to this company or to this government, and they will give you back the amount that you give, plus a fixed amount of interest that they determine at the time of issuing the bond. Some people just give you back the initial amount back, or there are some that have a higher rate of return as well. These are really good if you are coming into the stock market for the first time. If you don't want to risk picking individual stocks, you can also pick out bonds, but with any form of investing, there is definitely risks associated. And then you'll also find funds, and funds are like lots of little stocks, lots of little bonds, all these little packages tied up in a bow. A fund, you can buy a fund, which is basically a piece of a group of financial products. So usually this is created by mutual funds. They basically pick particular stocks to put within their group, and then you are able to buy a piece of that and become part of this group of people who are investing within this mutual fund. There are also index funds and ETF funds as well, but you are basically buying into a group of shares rather than one individual share. So you might see like the S&P 500 or an index fund that follows the S&P 500. You are able to basically have a little tiny piece of 500 of the top companies within America, or the FTSE 100, which are the top 100 firms that are on the FTSE 500, which is a stock exchange as well. And I don't think I've mentioned a stock exchange, but let's call it like it's the Tesco. It's where the buying and the selling happens. And then you might hear the term portfolio. This is basically what you have within your bag. You've gone to the grocery shop, or you've gone shopping and you've picked an apple, you've picked an orange, you've picked a pear. That means you might have some stocks, and you might have some bonds, and you might have some funds. And that is a way to build a portfolio. And how you balance that and what you pick is really important for you as an individual, and it's very, very personal as well. But you do want to have a portfolio that is balanced, because there is risk entirely associated with investing. So getting into the how, there are different ways that people buy or invest in the stock market, should I say. So there are people who trade. Trade is the sexy wolf of Wall Street. It's the like, buy now, sell now, buy, get rich. Woo, we made it, titties. I don't know why I just said that. But yeah, trading is a bit more of the like the glamorous side of investing. This is where people are usually like timing the growth of a stock. So they're putting money in when the stock price is low, and they're selling their stock when it increases in value, or they might be also shorting the market. There's lots of different reasons to why someone might choose to go down the trading route, but it is to basically make money off the value of the stock that they have bought and then make a profit on that. And they do this usually in quite large volumes, and it's very, very risky. I would suggest leaving trading to the pros and to the experts. They study this, they learn this, they analyze the market, they eat, drink, sleep it. And I know people who, for instance, who were traders, they do not leave their screen for literally 10 hours straight. When that market opens, that's it. That market might be opening at 6 a.m. They're there, don't talk to them, don't eat, don't sleep. And then they stop when the market closes. That isn't for someone who's just trying to make a quick buck. You could lose every buck by trading if you don't know what you're doing. And then there's the option to buy and hold, and that is if you basically want to pick your stocks yourself, you want to hold them in your portfolio if you want to receive a dividend, or you want to sell your stocks at another point in time. This is not the same as just trading, because your goal is to potentially hold your stock, but you're actively looking for investments and actively trying to buy stocks. And then you can also passively invest in the stock market, and this is normally by going via index funds. Index funds are there to basically track all of the top companies based on some form of particular category, and rather than you having to pick the stock or look at what's going on, you're just following whatever happens, and the trajectory usually for the market is upwards. In this case of passively investing, you're not trying to time the market, but you want to have more time within the market. So the longer you keep your money in the market, the more money you will make. And your goal is probably to reduce risk as well. So the first way you could do this is by using a financial professional, using a financial advisor. I would recommend this if you are someone who is a bit more high net worth and doesn't have the time, doesn't want to do the research, is really, really scared. A financial advisor is someone who can walk you through investing yourself. However, you know, the fees associated with a financial advisor actually can end up eating into your investment. You'll also find that especially if you're spending upfront fees, that you might not even make the money back in a short amount of time. If you've had to pay £1,000 or £2,000 upfront, it could take you 10 years on a really low investment portfolio to make that return back, honestly. So I think a financial advisor is for those who are a bit more rich, who've got a bit more to invest and don't want to do it themselves. That is an option. Another option is to use things such as a robo investment platform. So things such as Nutmeg, Wealthsimple, Wealthify. These are platforms where it's very similar to an investment advisor, but with significantly lower rates. And what they use are algorithms to determine, based on your risk profile, what the right investment is for you. They'll come up with a portfolio, they'll come up with a mix of bonds, shares, indexes, all kinds of products that you would buy. And so you would commit to the amount you want to invest. They would take a fee, and they might even take a platform signing fee as well. But the fees that you find on Wealthify or Nutmeg are much, much lower than going in an investment provider. But what you really want to look at are things such as transaction fees, buying and selling fees, and any costs that are associated, because every time you invest, there is a cost associated. And if the cost is higher than the rate of the return you're getting on the investment, then what's the point in doing it? Because your goal is to make money, right? And then you can also invest yourself. Now, if you want to start investing yourself, you will need to open a brokerage account. There are so many different brokerage accounts: Hargreaves Lansdown, Trading 212, eToro, Vanguard, Fidelity. There are a lot of different platforms out there that anybody can have access to. Now, some of them, charge an opening fee, but what a brokerage account will do, it will give you access to the product on the market. Every single brokerage account has access to different products, and they also have their own fees. That is the most important thing you want to look at when you are picking a brokerage account. So for instance, if you open an account via Vanguard, I believe that you can only buy Vanguard index products via Vanguard. But for instance, if you open an eToro account, you basically have access to potentially the entire market. They've got a lot of products and services that you can buy, including Vanguard index funds as well. Once you open a brokerage account, you can then literally buy and sell shares. That is it. The brokerage account is all you need. But you need to work out what shares you want to buy and sell. That is not advice that I'm going to give. I'm not a financial advisor, but it's up to you to do the research and to get an idea. Most people look at buying index funds versus picking individual stocks, because picking individual stocks is very risky unless you're going for something that is long-standing. But again, it just depends on you as a person. If you invest via an index fund, you are able to hedge your risk because you're getting products all across the market. So if you know what you want to buy, all you do is connect your brokerage account to your money account. You basically deposit money into your brokerage account, and you basically buy. That's it. So share prices value tremendously depending on the product that you want to buy. You just need to make sure you have enough of a balance, and then you can buy one share or you can buy 400 shares. It all depends on how much money you have. There are even some platforms that allow you to buy part of a share. So you've heard a lot about Robinhood. Robinhood, I believe, give you the option to do that as well. Now, when it comes to picking and looking for a brokerage account or a broker to start with, please make sure that they're insured. Please make sure that they're registered with the applicable authorities, and you need to work out how much that you are protected against. Some of them, can protect you up into 250,000 or up into 85,000. So if you have more money with them and that hedge fund or that brokerage account goes under, you're effed. Your money is gone to the dust. So you do want to be careful and make sure that they are registered with the right authorities and are following the most up-to-date legislation. So guys, that is it. That is me addressing investment for beginners. I really hope it was easy to understand. I tried to touch on everything. If you want to see my own personal investment account, and if you want to watch me invest, let me know in the comments. Leave a thumbs up. Let me know that this is something that you're interested in. If you're already on your investment journey, please let me know. I'd love to hear more about it. But if you are, feeling mystified or didn't understand how investing worked, I think they should give you a nice little introduction. Now, there are hundreds of videos you can watch. So go ahead, do some learning, do some reading. I'll put some links in below in some of my favorite websites to learn from, as well as some of the brokerage accounts that are out there that you can open. I'm not sponsored by any of them. This is me just sharing some of the knowledge that I have because you guys are super valuable to me. So yeah, we'll do that. So guys, I hope you enjoyed that video. That is it when it comes to investing for beginners. If you want to see more, let me know in the comments and leave a thumbs up. Thank you for watching, and I'll see you all later. Bye.